Well, I have 10 o'clock. We've got a good group on already, and hopefully we'll maybe have some more join later. But I do want to go ahead and get started so that I'm not taking any more of your time than we need to. Welcome to part two of our three-part discussion on QuickBooks. Um, this is a high-level analysis. Obviously, we can't go into all the details on a group session like this, but love to at least get you familiar with it. And then as you see things that you aren't familiar with or that you need additional help on, certainly reach out to any of the supporting services consultants for additional help. My name, I see some names on here that I recognize. My name is Mark Vaughn. I'm a consultant with IDOT. I've been working with their management supporting services for over 12 years now, off and on throughout the time there. And I've been in the public practice as a CPA for 30 years now. So I've worked with QuickBooks quite a bit. I've seen a lot of different versions of QuickBooks and have used it and recommend it to our clients. We're the supporting services consultants for District 7, 8, and 9, which is southern part of the state. Melissa Hamilton covers Districts 4, 5, and 6. And Michelle Ringgold with Ringgold and Associates covers Districts 1, 2, and 3. That information is all available on the IDOT website, but if you need contact information for your consultant, if you're not in my districts, I'd be glad to try to get that to you so that you can get the best possible benefit out of the services that we offer. As we go through, try to keep yourselves muted. If you do have questions, I'm looking at the chat here. You can feel free to put a question in the chat there, and we'll discuss those as they come in. The session is going to be recorded and will be available later on as well. And then there may be a short survey that you get sent just to give your feedback on how the session went, anything that you see that could possibly be more beneficial. Again, I want to reemphasize that the purpose here is to give you a high level view, what your interest in things, and then reach out for additional help if needed going forward. I hope you can see my screen here that says IDOT's goal. Obviously, their goal is to provide DBE firms with access, transparency, equity to work with IDOT. IDOT has probably one of the premier programs for supporting services in the country. I know they've done a lot of work looking at other states, looking at other similar programs, trying to find ways to take the best of all the different programs that are out there. Then they work toward this goal in a variety of different ways. They have different tools available at the resource centers. Hopefully you are familiar with the resource centers in your districts. Of course, then partnering with consultants. I've mentioned those that are the management consultants. ESI Contracting, Dave Clark, provides the technical consulting. So maybe you look at this and say, hey, I think I've got the management side, the accounting, the bookkeeping, the bonding and financing. I've got that side in good shape, but I really need help on the technical, putting together bids, putting together estimates, understanding quantities, working with the resident engineers. That's where ESI comes in. They're an engineering consulting firm. They've been working with IDOT quite a bit over the years. They've recently brought in a new consultant to help not only with what they do, but also to help with the DBE side of things that they work with. I think you're probably going to recognize the name if you've ever worked with IDOT. They now have Ron Brown as one of their consultants. So he is a great resource on the technical side, as well as Dave Clark and all the others there at ESI to help you get through this. One of the great things about this program is it's all no charge to you. So never hesitate to contact somebody for help. I've had people say, oh, we don't want to bother you. We know you're busy. Don't worry about it. We're here to help you. And the beautiful thing is it doesn't cost you. So never hesitate to reach out for help. Brian Hendricks is what I would call my boss. He's the one who oversees the Office of Business and Workforce Diversity in the Disadvantaged Business Enterprise session. So if there's ever concerns with any of the consultants or if we have questions, Brian's the one to answer those questions. I email him regularly with questions about something, and he's the guy at IDOT who can help answer questions from you or from us as consultants as well. Obviously, we're trying to increase opportunities for DBEs. That's not a guarantee, but these free resources can help to strengthen your skills and help you to be the best contractor out there. I've told a lot of people this program should be another tool in your toolbox. It takes a lot of skills. It takes a lot of things to be able to compete in today's market, and you want to have as many tools in your toolbox so that if a prime contractor is sitting there looking at two different people and they see that you've got a few more tools in your toolbox, they're probably going to go with you. So this is one that they want to have available. They want to help you know how to navigate the different problems that may come up. They want you to be able to be connected in this with the established firm. So we have different networking events. There was one in Collinsville a couple weeks ago. Just a great event. Several prime consultants there, several DBE firms there, an opportunity to meet some of the people from IDOT. Tony Day was down, as well as other IDOT people, where you can get one-on-one conversations with them and meet with them and get to know how best to utilize the program. And of course, discovering best practices for work with IDOT. Everybody you work with is a little bit different. And so you want to understand what is the IDOT looks for, what do they need, so that you know how best to compete on IDOT work. Each of their 9 districts has a resource center. There you can get computer access, they have internet's available, scanners, copier, printer, there's staff there. We can meet with you there. Dave Clark can meet with you there. So you have access to the plans, you have access to the equipment to get the plans, to print the plans. Again, this is all no charge to you or your firm. So if you can come in and then be ready to bid on the projects, or realize, no, this isn't a project for me, so get you that information. Here's the different resource centers. You see District 1, 2, and 3, obviously, that are up in the northern part. They are, again, the management is provided there by Michelle Ringgold. Here you have the other districts, 4, 5, and 6, 7, 8, 9. This is all available, of course, on the IDOT website. I would encourage you, if you're going to go to a resource center, contact the people there. One, some of them are by appointment only, and 2, we live in a day where COVID restrictions continue to exist. Hate for you to show up and find out that there's a COVID restriction at one of these resource centers. I'm not aware of any right off. I just know that as I go around, I am seeing more and more COVID restrictions put back into place. So contact them first, make sure that it's okay for you to show up and meet with either the consultant or meet with the IDOT staff. The assistance that we can provide, I've already mentioned some of this: estimating and bidding, financing, accounting system, business plans. If you want help in something, contact us. We can let you know we can or can't help you in that area. I had somebody contact me the other day, wanted help in a specific area. It wasn't something that we can assist with, but at least they ask. You won't know if you don't ask, and if it's something that we can, absolutely take advantage of it. If it's something that you can't, we'll let you know, so that you're able to get the best possible help. Here are the names that have been thrown out to you. Certification, most of you are probably past that already. You're already certified either by IDOT or one of the other participating agencies. Then the management and technical names are there as well. Again, this presentation will be available later if you need to refer back to this slide to get all these names. These names, again, of course, are all available on the IDOT website. They do have workshops. One of the big workshops we'll talk about later on, that will be the TCTR. That has been scheduled finally for February. We'll talk about that more, but there are occasional other workshops. These workshops that are going on right now, the winter series, I can't even believe I'm saying winter, but it is pretty much that time. Gives you a chance to, these are online, some of them are in person, give you a chance to network, get to meet other DBE firms, get to meet other prime contractors, but you can share what skills you have. You want to network and know as many people as possible. When we were first starting our firm, we spent a lot of time going to networking events, getting to know people, getting to know who's out there, who can work well with us, who we can work well with. It's ways to help other people. Maybe you've had maybe you're going looking for help, and maybe somebody will come to you and say, hey, have you run into this before? And then you can collaborate together and help each other out. In our environment today, we've got to be able to work together. We've got to be able to help each other out. I know as we started our accounting firm, we needed help from a lot of people. A lot of people were willing to take a few minutes helping us. We want to be willing to help other people in the same, and I'm sure that you see that in the construction field as well. What are best practices? What are policies and procedures? If somebody's already invented the wheel, there's no point in reinventing it. Let's see what they've learned, what they can do. You've probably heard the phrase, pay it forward. Somebody helps you today, you can help somebody else tomorrow. It's the best way to get business done rather than trying to stay in your own little silo and not get out and meet other people. The TCTR, as I mentioned, you see here, it's February 15th and 16th of 2023. If you're not paying attention to the calendar, 2023 is here. It's on the verge. I'm already seeing people with 2023 wall calendars out to pick up. So make sure you're getting ready for this. Mark this out on your calendar. We'll be back in Springfield this year. They'd hope to move it to Chicago, but for a multitude of reasons, it's going to be back in Springfield this year. So put that on your calendar. It's a great opportunity to go to workshops, to get one-on-one assistance, to network, not only with the consultants, to network with the other DBE firms, to network with prime contractors, to network with IDOT. Just a lot of opportunities there. So there'll be suppliers there as well. So you want to be sure that you're there so that you can get exposure, get your face in front of people. It's great to have marketing literature. It's great to have business cards and brochures and cut sheets, but nothing's better than that one-on-one contact. So when they look at the business card, they know, oh, I remember meeting this person. I remember talking to them at TCTR. So they have a face to put with the name. That was hard the last couple of years. I've gotten to meet a couple of people here in the last few months that I'd worked with for a couple of years, but had never gotten to meet in person because of all the COVID restrictions. So this will be a great opportunity to meet people, shake hands, pass out marketing literature, and really get to know people. One of the different available programs, there's a reimbursement program. Great opportunity. Who wants to pay more for things than you have to? IDOT can help with some of that. They can help with association and membership costs. They can help pay for some training and certification classes. They can help with a website and capability statements. So let your management supporting services consultant know, hey, I need help in these areas. There are more areas. They will help pay for accounting software, for QuickBooks, if you have the payroll module. They will help pay for, if you have to have an audited financial statement, there's some money available to help pay for an audited financial statement. Just let us know. Here's where we need help. Can IDOT help me? And then we'll walk you through the steps that are needed to take advantage of this reimbursement program. The business development program, as it says here, enrollment opens once a year and they accept 15 firms. They'll be accepting firms in 2023. This business development program gives you more specialized service. So we'll work with you. We'll put together a business plan and help IDOT to see where are specific areas that you need assistance. What are areas where you might particularly be struggling? And then they'll tailor those specific areas so that you will work with us or with technical supportive services to get the hands-on assistance that you need to be able to grow and take that next step. Obviously, the end goal is to see DBE firms grow and potentially even graduate out of the program. There are size limits, and it'd be great to see firms graduating out because their business has grown to the point where they're no longer considered disadvantaged. Mobilization payments. If you're not familiar with mobilization, talk to the technical supportive services. This gives you a graph here, which I don't know if you can see my mouse moving. Depending on the size of the contract, depends on how much mobilization is available. The bigger the contract, the less mobilization, but that gets you some money to get out the door and get things started. It takes money to get going sometimes, getting the equipment there, getting the initial things put in place. So make sure you're talking to the prime contractors. Hey, we're ready to get going. We need the mobilization payments so that you can get the upfront money that you need in order to be able to get out and get going on the job. There's the HCCTP program. I don't know why I always have a hard time saying that. HCCTP, Highway Construction Careers Training Program. It will provide additional training for you. There's a lady at IDOT that we can put you in touch with who oversees this program, provide you with great resources there to draw people from the program who are going to be highly skilled, well-trained, able to come in and hit the ground running for you, working so that you can have the best possible staff to show. Who would have thought 5 years ago that we'd all be sitting around saying, where'd the employees go? But it's hard to find employees. It doesn't matter what industry you're in, it's hard to find employees. This may be a great way to find the well-trained staff that you need. So keep that program in mind as well. As we're about ready to get going here, if you have questions as we go, put it into the chat box. I will try to respond to those that I see them pop up so that we can keep up with questions. What are we going to do today? We're going to talk about some of the high level things on QuickBooks. Last time we talked about setting up the company. For those of you that were here last time, we kind of went through. Hopefully you've had a chance to play around with it a little bit, see how you get things going. But today we're going to talk about the chart of accounts. The chart of accounts is like the backbone of your company. You want to get it set up correctly. When you set up your company, QuickBooks will give you a template chart of accounts based on the industry that you select. QuickBooks knows, okay, these are the normal accounts for that type of an industry. So it will give you that, and then you can just tweak it and tailor it to your specific firm. We'll talk about items and services. We'll talk about the vendor center, setting up a new vendor, how to enter bills. QuickBooks is very intuitive. And I don't want to in any way diminish the knowledge of my 15-year-old daughter, but my 15-year-old daughter helps me with these. We have my family has an auto repair company. She does this for me. She enters the vendors, she enters the bills, she handles all this. She's still in high school and she figures this stuff out. So it's very intuitive. And once somebody has shown you and walked through this with you, you'll probably be able to pick it up pretty quickly. But let us know, hey, I'm struggling in this area. We can get more hands-on, more one-on-one. So customers, entering new customers, how to enter estimates and invoices, how to process payments, how to set up employees. That you may look at this and say, Mark, I'm never going to use some of this stuff, and that's fine. Maybe you won't. Maybe you will. We want you to be as knowledgeable as possible on these, so that you're ready to use whatever functions it has. QuickBooks has a lot of functions, and we want you to be prepared to do this. You may not start out with any employees, but you kind of a little bit of a knowledge if you do, or when you're ready to add employees. Banking, what is a bank reconciliation? I cannot believe the number of people that do not reconcile their bank accounts. This is a vital part of bookkeeping and a vital part of keeping your business on the right track, is doing your bank reconciliation. QuickBooks has a great bank reconciliation tool. This past year, when we've been doing bank reconciliation for our clients, we've had 2 clients with checks cleared that were incorrect. One of them was a check from somebody in Wisconsin. It somehow cleared my client's account here in Illinois. They both use a bank that has locations in Wisconsin and Illinois. And somehow this other company's check cleared my client's bank account. We would have never known that if we hadn't been doing the bank rec. We do the bank rec. Like, what's this check clearing your bank statement? It's not in here. Looked into it. Oh, it's from some other company. And then another one had a check that had cleared the bank twice. So banks make mistakes. We need to be doing that bank reconciliation so that you know what is clearing your bank is correct. And then looking at the reconciliation reports, there's 2 on there. There's the detailed and the summary report. We're going to hit all these things as we go through today, so that you can have a conversational level on all these. You probably won't be an expert, but you at least understand how do we do them. The chart of accounts. Again, this is your backbone. This is where you're going to determine what's going to be on your report. Your 2 basic reports when you get going are going to be your balance sheet and your profit and loss. Where do those numbers and those titles come from? They come from the chart of accounts. It lists all the accounts. It's going to have your bank account. It's going to have your receivables if you keep track of receivables. It's going to list your equipment, your furniture. It's going to list your income accounts. All of your accounts that you're going to use are going to be listed on here. Now, this is an important part, but don't go overboard. I have seen charts of accounts that are way too much detail. One of them would take one client that I worked with, they would take their Walmart bill and they would break it out on their chart on their financial reports, so that if they bought ink pens, they had an expense account for ink pens. They had an expense account for water. They had an expense account for every little thing, rather than just calling it office supplies. So you want to keep them, when you set these up, you want to keep them somewhat broad, so that you don't end up with this 3-page chart of accounts. I spoke with a friend yesterday who's working as a controller for a local nonprofit, and she said they had a 3-page chart of accounts because they would detail out all of their donations way too much. They would detail out all their expenses much further detail than what you need. You see over here some of the different income expense items, office supplies, other supplies, dues and subscriptions, insurance expense. What are your broad categories so that you can use this as you build this and build data? You're going to be able to compare. You're going to be able to look to see how much material did we buy last year and how much did we buy this year. Well, we see that last year our revenue went up from the prior year. Some expenses should be going up as well related to that. So it gives you the ability to compare year over year. So initially setting up that chart of accounts is very important to make sure that it's for you. These reports are for you as management. They're to help you manage the company. So while I'm more than glad to and able to help you set these up, we need to have that conversation to know what accounts work for you. It's not what accounts work for Mark, it's what accounts work for you as a business owner. Again, then so that you can build that history. So if you code something as an office supply this year, you need to code it as an office supply next year. If it's a material cost of goods sold this year, it needs to be a material cost of goods sold next year. So that you can track and you can look at these comparatively year over year to know where, to catch any red flags in your business. Here's a little bit bigger example. You see along here, the items. This is the items and services. This gives you then the ability to do the billing. So you see that these are all services. What kind of items, what kind of work do you do? Providing enough detail so that you can manage your business, but not to the point where it's cumbersome. You see some of the examples here: excavating, concrete, masonry, floor framing. What items do you do? Do you do excavating? Well, let's put that in. Do you do concrete work? But if you do excavating, you don't necessarily need to keep track of it by piece of equipment. I've seen some where they keep track of their items by piece of equipment. That can get pretty cumbersome. So you're going to set these items up in such a way that you then can generate billing for them. My boys have a mowing business, and they have in there, they have commercial mowing and they have residential mowing. Those are their two main items in there. So they can keep track of their revenue. And then when they go in and they bill, you see over here the accounts, it then bills to that correct account, which will then flop over to your profit and loss. So all of these reports build to get to either the profit and loss or the balance sheet. We're filling in the background here, building that model so that when we get to our end reports, the profit and loss and the balance sheet, we've got all the details going to the right spot. If these are set up incorrectly, then obviously what comes out on the profit and loss and balance sheet are going to be incorrect as well. So you want to be sure as we're walking through and setting each of these up, we understand, where do I want this to go? When I put in my building permits item, where do I want that to show up on the profit and loss? When I put in excavation, where do I want that to show up on the profit and loss? And this column right here, the account column, tells you where it's going to show up on the profit and loss. You can even put in item pricing right here. So that if every time I'm doing excavation, I'm going to excavate by the yard or by the hour, whatever our key indicator is there, we can put that in right here. So when I then generate a bill for XYZ contracting, I excavated 30 cubic yards of dirt and my price is this amount per cubic yard. And then just fills right in for your invoices, which then of course fills right in for your accounts receivable, fills right in for your profit and loss. So putting these in between the chart of accounts here and the items and services, setting this up correctly helps everything else that comes from it go correctly as well, and therefore provides the end results that you want to see. Your vendors, your vendor information can really be what I would call, can really be added on the fly. Maybe in advance, I've got these vendors I'm going to work with. You can go ahead and set them up initially. But vendors can be set up as you go. So when you're paying bills in QuickBooks, you're going to have what truly looks like a check sitting there to write your check. You can put the vendor in the payee name, and at that point, it will tell you, hey, new vendor, do you want to set up this vendor? You can go to the vendor center though, and you can set up the vendor. Important data, it will include, you see here, it includes the company name, it includes the address for things. One thing that really I've not run into anybody that's good about is keeping track of the necessary tax reporting for vendors. If the vendor you're working with is not incorporated, you need to be issuing them a 1099 at the end of the year if you pay them over $600. This is where you're going to do that in the vendor information screen. When you set this up, you're going to set it up so that you can right here on the tax settings, you're going to say, hey, this person needs to get a 1099. That means you need to get a form for them to tell you their tax ID number so you can properly generate that 1099 at the end of the year. QuickBooks does a great job generating 1099s for you as long as you put the information in. If you don't put in under the tax settings that they're eligible for a 1099, if you don't put in the tax ID for them, QuickBooks can't generate the right reports. Excuse me. But by setting the vendor up correctly, then you have all that information. You see here, you put in the vendor name and address. If you print your checks through QuickBooks, it'll all print out and be ready to drop in the mail. Phone number, contact information. What are your payment terms? Are you to be paying them? Do you get a 2% discount if you pay them in 10 days, net 30, or whatever your payment terms are? You'll put all that here on your vendor screen. Maybe you use a vendor and then they close and you're no longer using them. Well, you don't want this big long, if you go back over here, you don't want this big long vendor list here if you're not using them. You can just go through occasionally and mark, hey, this vendor is inactive, and then it no longer shows up. Your data doesn't go away. It just no longer shows up on your screen over here. You see right here, it says active vendors. Well, if I mark somebody inactive, they no longer show up here. But to find them later, you just hit this drop down, and now you can see, oh, this is an inactive vendor. Bring them back if you start using them again later. When you go to pay your bills, so you get your vendors, you get them set up, you enter your bills, you need to pay them. Obviously, you have to pay bills. You just come in, all your unpaid bills are going to be listed right here. You can go in and click, I want to pay this one, I want to pay this one. What's really nice is QuickBooks keeps track of this for you down here. I'm going to pay by check, and it's going to come out of this bank account. And you can see how much cash do I have. So that way you're not, I don't remember if I've got enough money in this account to pay these or not. You got a running balance right here. As you check the bills to pay, it lowers your checking balance. If you're going to pay it by credit card, then you tell them I'm going to pay it by credit card. It helps you keep track of the credit card balance as well. As you're paying the bills, you're checking them off. It lets you see, I've got this much money left. I can pay this many more bills. Keep clicking them as you go down so that you don't run out of money or accidentally pay too many bills. In the bills, I probably should have had this slide first. You go to your vendors, enter bills, who's the vendor, what's the date of the bill. You want to be sure you're filling out this reference number, and you want to be sure you're doing it the same. I've got, so I mentioned that my family's got that auto repair shop. One of our vendors, we have an account code, which is 4 digits, a hyphen, and then usually 6 or 7 more digits. Well, if we enter all those numbers together without the hyphen, QuickBooks doesn't realize that that number may have already been used. But if I use the same format each time, 4 numbers, hyphen, 6 numbers, I put in the same invoice twice, QuickBooks is going to warn me, hey, this is already in there. It's a duplicate. You want to enter it again. So it warns you, you don't enter the same invoice twice. It's easy with the amount of paperwork we have today. It's easy to accidentally enter an invoice twice. So you want to be sure you're using this reference amount and you're using the same pattern each time. You see here, it's got ACCT 1, 2, 3, 4, 5. Use that same pattern each time for them so that it'll flag that extra invoice. And sometimes you enter ACCT 1, 2, 3, 4, 5, or sometimes it's ACCT - 1, 2, 3, 4, 5. It's not going to catch that's a duplicate invoice. So make sure you're using the same pattern. You put in your amount, when it's due. You've already entered your terms, so the terms should be there. What expense category does it go to? QuickBooks is really great in memorizing things. So if you buy from vendor ABC and you go to job expense a few times, QuickBooks is going to start to remember that. And they're going to, next time you put in vendor ABC, it's going to auto-populate job expense. If that's all you use with that vendor, then it kind of streamlines the process. If it isn't, then you may need to occasionally override that. My experience is by and large, you're kind of buying the same stuff from people each time. So that intuitiveness of QuickBooks kind of helps streamline the process. If you're billing it to a job, then you're going to put in your customer and your job over here, and you're going to click billable. But you know, I need to bill this back out. Hey, on this job, I'm billing you for time and material. Material has a markup on it of whatever it is. So I need to mark that, yes, this is billable to this job. So when I do my invoicing, I see I have these costs that need to be billed out with my labor and my other expenses. So that's the bill side, the payment side, the vendor side. Now the income side. We set our customers up. We want that detail again. Here's our customer information. Here's the name and the address. What do I have with them? A customer is somebody that I owe, that owes me money. The vendor is somebody that I owe money. So how frequently do I expect them to pay me? Do I give them a discount if they pay me within 10 days? You're probably sitting there saying, hey, Mark, I'd be happy if they pay in 30 days. I'd be happy if they pay in 45 days, some people. So what kind of payment terms do you have with them as far as them paying you on your customer list? Same thing where you see here, we have active customers. If you mark a customer inactive, they're not going to show up on this list. They don't go away. They don't get completely eliminated. They're just so you don't have this huge cumbersome list of active customers. If you need to go back and bring them back, you just click on this drop down. So you want to see all customers, you want to see your inactive customers, and you can then find again that customer that you were working with. Here's your new customer setup. Sales tax setting. Yeah, I don't know what all you do in your different construction industries, but if you're primarily service, you don't need to worry about sales tax. If you have a client that they not only do construction, but they also sell materials. So they have a stockyard with rock and mulch and different types of gravel there. So they do have to deal with sales tax because somebody may come in and buy some of those products from them. So what are the sales tax settings? Depending on where you are located, you're going to have different sales tax rates. A lot of municipalities in the state have different sales taxes that have been added on. So make sure you check with Department of Revenue. Illinois Department of Revenue does have a great tool so that you can then drill down to see, okay, here's my zip code. Do I have a different tax setting here than from the basic state tax setting? So you have the basic rate, and you may have additional municipality rates put on top of that. There may be different zones also. Go to the Department of Revenue and check out their sales tax rate finder. You're putting together a proposal. You don't really want it as an invoice because it's just an estimate that you're doing right now. You can do those estimates, creating the bid, the proposal, the quote. If you then later win that job, you can then turn that estimate into an actual sales order or an invoice. But to give you a professional way to generate that estimate, QuickBooks does have a way to input and enter your estimates. This is where you've got your items. Remember, we set up the items earlier. The quantity, the rates, what markup you have, so that you see your total is 10.5. Now, they're not going to necessarily see all this on the invoice. They're going to see the 10.5 as your estimate, but this gives you the ability to fill the things in and prepare a professional looking estimate to potentially be turned into a formal invoice or proposal later on. Here's your invoices. So you see now we've moved on. We got that job. We've moved on to the invoice level. Now we can do the billing for it. This invoice then, once you generate the invoice, print it off, send it to them. This invoice then goes into your accounts receivable and your revenue. So now you show, hey, I've got $10,500 receivable from customer 123 because I've got 10,000 of work over here for customer 123. So it's a great way to keep track of things. We talked a little bit in the previous workshop about a cash versus an accrual basis. The accrual basis allows you to capture revenue when it's earned and expenses when they're incurred, not necessarily when the money is received. So it shows you that this job is done. I've earned this money. I've sent them the bill. They may not pay me for a while, but it gives you the ability to see I've got this money coming so that you can keep track of that, as opposed to the cash basis where you don't recognize the income until they send you the check, which may be somewhere down the road. A topic to discuss with your tax preparer. You can do your records on this accrual basis so that you can see, and your bonding company can see the work that you've done, the revenue that you've generated, the expenses you've incurred, but yet you can still pay taxes on a cash basis because you may not want to pay taxes on money you haven't received yet. I'll just throw that out there. Keep that in mind as a possible conversation to have with your tax preparer as far as what's the best way to pay taxes as compared to the best way to generate my financial statements, so that you truly can have two sets of books. When money comes in, you then go in and you receive your payments. You're going to go to your received payments, your customer payment. I received it from customer 123. They sent me $10,500. Here's the date. Here's the reference. Then I received check or cash. If you received a check, you can click on the check button right here, and then you can enter the check number. That gives you the ability to go back and track. Believe it or not, some people, they lose track of things, and they may contact you and say, hey, did I pay you? Can you send me the information because I need to verify my records? Oh, sure, you paid me on February 8th, check number 8597. And that will help them to keep track of things, helps you keep track of things if you enter this. Here's the obvious ugly side of accounting and bookkeeping. I could guarantee, even though I've not met most of you, not talked to most of you, I guarantee you didn't go into construction because you like accounting and bookkeeping. Unfortunately, in order to properly manage your firm, you've got to have the accounting and bookkeeping side as well. See, I'm the nerd that went into what I do because I love accounting and bookkeeping. That's what we do. That's what we provide for a lot of our clients. So you can contact me and, hey, Mark, can you help me get this stuff set up? Because supporting services can help you do that. We can come out on site with you and we can sit down. We can help you get all this stuff set up so that it's properly fine-tuned for you. So then you can use it as one of the necessary evils on a daily basis. Obviously not something that you enjoy doing, but if it's set up right, it flows smoothly, and it really isn't quite as labor intensive as if it isn't set up correctly. So back to where we were. You're receiving the customer payment. Customer 123 sent you that money that they owed you. You go in under your payments. At this point now, when you receive your payment, QuickBooks is going to make an entry for you automatically. It's going to take it out of your accounts receivable because the money is no longer owed to you. And it's going to put it on the balance sheet in an account called undeposited funds. So remember that name, remember that account. We'll come back to that in just a few minutes, but initially QuickBooks takes it out of receivables and puts it into undeposited funds. We'll come back to that part later on then. So we've got our employees. If you're going to do payroll, you're going to set your employees up. This, I can't stress the importance of making sure you've got the right papers for this. You need a W-4 from your employees. You need an Illinois W-4 from your employees. You need an I-9 from your employees. And I don't care if it's your mother who gave birth to you, you need an I-9 from all your employees. If the Department of Labor comes in to verify that you have people that are either citizens or are authorized to work in the country, and you don't have that I-9, they can fine you up to $10,000 per employee. So it's a piece of paper. It takes 15 minutes to fill out. It can be very expensive if you don't have it filled out. So make sure you have all this paperwork on your employees. Those are your basics that you must have: W-4, Illinois W-4, and I-9. If you're going to use direct deposit, you need a direct deposit form as well. If you're going to have other benefits, you may need additional forms also. You're going to come in here, you're going to set up your employees, you're going to put in their name, you're going to then be able to manage transactions. You can be able to process your payroll through QuickBooks so that it is done whether by check or by direct deposit. So I'm going to flip over here for a second. So I just saw a message pop up. And I want to jump onto that while we're still there, but I'm not finding. Carlos, I saw you put a message and now I'm not finding it. There we go. Let me make this a little bigger. Okay, so I've got a couple questions here. Carlos is asking, if I purchase office supplies with credit, do I enter the bill or import the credit card transactions? That's a great question because QuickBooks has a fairly good import tool. My answer, Carlos, on that to all of you would be whichever works easier for you, just don't do them both. I've had clients that do them both. They will enter their credit card charges and then they'll import the stuff from the credit card transactions. Whichever one you prefer, both of them work great, just don't do them both. The concern I have, because it will let you import your bank information as well. The concern I have with importing the bank information, it does not show up in QuickBooks until it clears the bank. So if I write a customer or if I write a vendor a check and I don't enter it into QuickBooks until it clears the bank, it may not clear the bank for several weeks. It may not clear the bank at all. And I don't know that because I haven't inputted into QuickBooks. So I'm not the hugest advocate of importing things because it doesn't import until it has cleared the bank. In this case, when we're talking about credit card transactions, that's going to be more accurate because credit card transactions are pretty instantaneous. Banking may or may not actually clear, may not clear correctly. So whichever way you prefer, both will get you to the end, the same end result, which just don't do them both. When receiving a payment, I use a deposit transaction from the bank and then I apply the credit. I think you're creating more work. Personally, I think it's easier if you receive the payment and then make the deposit. Both methods work. But then if you receive it, make the deposit, you then have to go back in and apply the credit to the invoice. Most likely, my guess is that's the way you were taught or the way you taught yourself. So if that works for you, that's fine. You're not messing anything up. I just think you're creating a little more work. If you go into if you come into here and you receive the payment, you can properly apply it to the invoice, and then you can go in later on. Let me just go ahead and jump ahead. Here's making the deposits. As I mentioned, when you receive that payment, it put it into undeposited funds, as you see here. So next time you go in to make your bank deposits, it's going to say, hey, you've got all these items out here that are undeposited. These are what you've received through your customer payments. Now do you want to deposit them? And then you can do that. If you've not received it, you're going to want to put in, if you're not going through the customer payments section, you'll want to be sure to put in the customer, what account it went to, all the other information, and then you can go back and apply it to that invoice. For me, it's just easier to kind of go back one step and then this step to get it into the bank account. So if you've not done it already through customer payments, it's not going to show up as being undeposited. If you have done it, it will show up as undeposited, and then you'll deposit all those into the bank account at the same time. Okay, so employees, you'll want to set up in here. In the employee setup, you'll put in their name, their address, you'll put in their bank account information, you'll put in the pay rates. You have, and I'll tell you, one of the really technical areas is setting up all the pay things correctly if you work with multiple unions. If you have multiple unions, you're going to have multiple benefits. You're going to have multiple pay scales. You may have benefit. Obviously, you'll have benefits that you, the employer, pay, as well as benefits that you withhold. So the dues and all that. So really making sure you get the employee information set up correctly is key in order to be able to generate the certified payroll that you have to generate down the road. QuickBooks does generate a certified payroll report. So getting that employee data set up is very important. One, because of the tax reporting that goes with it, but two, because of the ability to then generate accurate certified payroll down the road. Let me jump out of this for just a second and give you one word of caution. I've seen this multiple times when I've been working with a client that's run into cash flow problems. The first thing that they cut or back off or slow down on cash flow issues is making their payroll tax deposits. I beg you, don't do that. Payroll taxes will balloon quickly. Payroll taxes will literally get your doors locked. Don't do that. I realize the IRS, Department of Revenue, aren't sitting there telling you, I'm not going to ship you product until you pay me. But they will catch up with you. And when they do, they will be a big hammer in the room. So don't get behind on making your payroll tax deposits. Keep them up to date. It's very important. If you get behind on payroll taxes, the IRS considers part of what you're doing trust fund taxes because you are withholding that from your employee. Hey, I'm supposed to pay you $500, but I'm only going to give you $350 because I'm withholding $150 for to help with your tax responsibilities. That is trust fund money. The IRS is trusting me, you are trusting me to then move that to the correct next place. If I don't do that, the IRS can come after me personally. So that corporate shell I might have doesn't help any on trust fund taxes. Don't get behind on your payroll taxes. I know it's easy because you're like, oh, the power company is going to turn off the power if I don't pay the bill. My vendor isn't going to ship the product I need if I don't get them some money. My employees aren't going to show up for work if I don't pay them. All those things are true. But don't do that at the expense of the IRS. The IRS does have payment plans you can set up. They do have ways that you can work with them to make things. A lot of you, when you first set up, you're going to be set up to be a monthly tax depositor, which means every month you need to make a payroll tax deposit. That may be $3,000, $4,000, $5,000. You might find that it's easier to make a payroll tax deposit every time you run payroll. If you're a $5,000 a month payroll tax deposit, it might be easier to make $1,250 every week when you run payroll. So just food for thought, something to think about there, ways to make it easier to keep up with your payroll taxes. That's completely unrelated to this. That's just from my 30 years of experience. When I'm working with a small business and they begin to develop cash flow problems, payroll taxes are always the first thing they hold off on. And it's always what brings them down at the end is because they weren't paying their payroll taxes. We talked about making the deposits, entering your deposits, making sure that your data is correct, putting in the correct receive from the correct account. If you have received the payment through the customer payment screen, you won't need to put in the account. It'll already be there. It'll already be taken care of. From when you received it before. Excuse me, putting in a memo is always a good idea. I know none of you are probably old like I am, but when you get old like I am, sometimes you forget what things are. You put in a memo so that you can remember it later. That's right. That's why they paid me this money. If they paid by check, the check number, payment method, you're going to have basically three options: check, cash, or credit card. Now, I have seen some of my nonprofit clients where they'll get donations through Zelle payment, or they'll get donations through I can't think of the other Venmo. They'll set those up as payment methods. They'll set up Venmo as a payment method or Zelle as a payment method, so that they keep track of it. QuickBooks comes with the preloaded check, cash, and credit card, but you can add additional payment methods if you want to use them. And then the amount. It's always key. I haven't shown you this. It's always key when you get done to push save, either save and close or save and new, because the transaction isn't recorded until you save it. So make sure you put all those items in correctly and then save and close to exit, or save and new if you have a new one to enter. Journal entries. Journal entries can be your best friend, but it's not something that you really should need to do a whole lot. Journal entries give you the opportunity to fix a mistake. They give you the opportunity to put in something that isn't necessarily generated by check or by payment coming into you. Depreciation is one that's common to record by journal entry because you don't write a check for depreciation. Well, how do I get that expense recorded? Well, you do it by general journal. The journal entries are going to always have at least two sides. You're going to have at least two accounts effective, and your debits must always equal your credits. You can see down here your debits and credits equal. If they do not, QuickBooks won't let you save. It will give you an error message. Hey, this entry isn't in balance. So then you have to go back and get it in balance. So here it looks like a check was written that wasn't entered through the normal check process. So debiting subcontractor expense for $2,300, and they're pointing out this is for check 503, and then they're crediting their bank account. So I mentioned a bit ago, depreciation expense. You enter your depreciation expense for whatever your depreciation is, and then you're going to credit your accumulated depreciation. You may have 2, 3, 4, 5, 6 items on this transaction. You must have at least two because your debits and credits must always equal. Again, a good opportunity to fix a mistake, to correct something that got put in wrong, correct something that didn't happen the way you thought it would. I mentioned earlier about when you're entering your checks, it looks like a check. It does look like a check. If you don't have vendor one set up, when you type in vendor one for the first time, it's going to say, hey, new vendor, do you want to set it up? You can then set up, it'll take you to the vendor screen where you can enter your payment terms. You can enter the address for the vendor, all the other information that you need. If you're printing your checks through QuickBooks, you see you mark a box up here, print later. When you get done, you can go and print your checks. Great method of batch printing. In order to get these entered, you're going to need to do all this anyway. I love just printing them through QuickBooks. Yes, the checks cost a little bit more, but it gives you a great way to keep track of things and it avoids having to duplicate things. If you sit down and handwrite the check, then you still have to enter them into QuickBooks. So why not just enter it into QuickBooks and tell QuickBooks to print the check? Um, there are multiple types of checks you can buy. You can buy checks that are 3 on a page. You can buy checks that are 1 on a page, and then it gives you stubs. It gives you a stub to send with the check for the vendor, and then a stub for you to keep. What I like to do is I like to keep the bottom stub, staple it to the invoices that I'm paying, send the middle stub and the top piece to the check, because the top piece is the actual check. Send that to the vendor so they can see, okay, what checks are what invoices is Mark paying? It lists the invoice number and it lists the amount that's being paid. You just mark it to print. You go in and print a batch of them later. If you've already written the check, you'll unclick this and you just put the check number in there. QuickBooks will also keep track of your check numbers for you. You got your expense account down here. These numbers autofill when you put in this. When you put in the dollar amount here, these numbers down here automatically fill in. Now, suppose in this example, suppose this $1,000 was $750 of rent and $250 for utilities. So my lease requires that I reimburse the landlord for utilities. So $750 for my rent. I just drop down to the next line, put in utilities, $250 for my utilities. So a lot of flexibility. If it needs to be billed back to a customer, you'll put your customer in here and mark whether or not it is billable. Hit save and close, and you're ready to go on to the next one. Bank reconciliation. This makes sure that things are getting entered and entered correctly. One of the other benefits of printing your checks through QuickBooks is I only have to enter the number 1 time. If I have to write the number and then enter the number, I've now got the risk of somewhere maybe transposing the number, somewhere entering it incorrectly. If I enter it incorrectly into QuickBooks, I should catch that when I do my bank reconciliation. So I handwrote the check. I handwrote the check for $123. But when I put it into QuickBooks, I accidentally entered it for $132. Well, obviously the check is going to clear for the 123 that I actually wrote, not the 132 that I put into QuickBooks. How am I going to know the difference? I'm going to know when I do my bank reconciliation. I'm going to get my bank account, or you can look online, whichever you prefer, and you're going to see, hey, check 123 cleared for $132. Check 124 cleared for $725. Whatever, you're going to be able to see what actually cleared the bank. So I'm going to jump. So here is the bank rec module. On the left side here are all the checks that I've written, the check number, the date, and the amount. These are all the deposits that I've made, the deposit date and the amount. So I can just go right down this list with my bank statement. Okay, so the deposit I made on January 2nd for 2,000. Yep, there it is on my bank statement. Click. I made another deposit on January 2nd for 5,000. Yep, there it is on my bank statement. Click. And you're just going to click these off as you go down and as you see that they've cleared the bank. If they haven't cleared the bank, you don't check them off. And normally your deposits, if you do this on a timely basis, your deposits are pretty much all going to clear every month. Your checks probably are not. And you're just going to same thing over here. You're just going to check off, check as they clear your bank. You're going to check them off. So you're going to end up down here. If you can see my mouse again, hopefully you can. A difference of 0. That means that everything that has cleared the bank has been properly recorded into QuickBooks. So let's go back. Do it at a minimum each month. At a minimum, reconcile your bank each month. If cash is tight, I recommend doing it more than that. I will at times, I'll sit down, I'll do my bank rec a couple times a month. I don't close out the bank rec. You see here, this is getting into it. And then you see down here, reconcile now. I don't close that bank rec out until the end of the month. But that lets me make sure that I haven't missed anything. I have some on our auto shop. I've got some automatic deductions. Health insurance for the employees comes out automatically. Loan payment to the bank comes out automatically. Well, I'm not writing a check, so I want to be sure that I'm getting those entered. I'm regularly reviewing my bank account, reviewing the bank reconciliation to make sure I didn't miss something and inadvertently overdraw the account. The tighter the cash, the closer you want to keep an eye on it. The looser, the more cash you have available, then the better. If you're doing your bank rec and you see you've got outstanding items from 2020, 2021, you need to find out why. Why are they still outstanding? Why haven't they cleared the bank? Did it get entered twice? That's frequently the answer. They got entered twice. Did the check get lost in the mail? If the check got lost in the mail, hey vendor, I sent you this check June of last year. Did you get that check? Make sure that they got the check. They may say, no, I never got it. In fact, we're getting ready to turn you over to collection because we never got it or whatever. Well, then you can void the check that you have and reissue a new one. Now, I'm going to tell you the technically correct answer. If a check is out there and it has not cleared and you cannot contact that vendor to clean up the problem, you need to turn that over to unclaimed property. You need to write a check out to Illinois Unclaimed Property, submit it to them, give them the details on it, and then they'll hold on to it for that person to eventually receive. But you need to be investigating that. If you're doing, as you do your bank reconciliation, if something gets more than 2 months old, time to start looking into it. Why hasn't this cleared the bank? What happened? Oh, I got buried in my drawer here. I never actually mailed it. Maybe you're going to call the vendor and they're going to say, yeah, we got the check. Your account's good with us. Something got messed up on the banking side. You can contact the bank and find out what they need to do to try to track down that check to make sure that it properly clears the account. So nothing gets lost. But if things get much more than 2 to maybe 3 months at the most old, I start looking into them so that you don't suddenly have stuff that's a year or so old. At this point, to the question that was posed to this point, if you've got stuff from 2021, I'd be contacting the vendors, finding out, did you get those? If was it entered duplicate? A lot of times you're going to find that it was entered duplicate. There's a process for voiding checks. Be careful how you do it. Contact the supporting services if you need help on voiding a check. Because if you don't void the check properly, it will retroactively void the check. So your tax return is done, it's filed showing this is what happened last year, and now you go back and void a check into last year, it's going to change the numbers that you look at. So you want to be sure you follow that correctly, so that you don't accidentally go back and start changing numbers from last year when you already filed the return for last year. So here's an example of bank reconciliation, the report. You're going to look to make sure your dates are correct. Make sure that your deposits are all correct. This is not the report generated from QuickBooks, but you're going to have your beginning balance, your deposits, your checks, other withdrawals, and your ending balance. So if this is your bank statement, let's say this is your bank statement, the bank statement says your ending balance is $31,936. And when you come over here, you're going to enter that right here, your $31,936 as your ending balance, whatever the ending balance is on the bank. I have people regularly ask me, why isn't my bank balance the same as my book balance? Because it takes time for things to clear the bank. So the bank doesn't know you've written that check until somebody presents it to the bank and says, hey, I want to be paid for this. So there will be a difference between your bank and your book balance. This reconciliation process helps you make sure that nothing's been missed in your recording. On to the date of the statement. Beginning balance should agree with the beginning balance from before, and then the ending balance will be whatever's on the statement. If you have service charges on your bank account, you can enter them right here. If your bank account earns interest, you can enter that right here as well, so that you can be ready to go on to the next part. This being the bank reconciliation. Of course, in our example, everything is very current. We don't have anything old and outstanding, but in real life, that happens. In real life, things rarely clear in a timely manner. Just keep an eye on it. If it gets much more than 60 to 90 days, start digging into it to find out why not. When you're all done, you hit this reconciliation now. If you're anal like I am and you reconcile your account 2-3 times a week, when you're done, okay, everything agrees. just hit the leave button, and then everything you've done stays right there. It doesn't finish the reconciliation, but it lets you pick back up the next time right where you left off. You hit this leave button. It lets you right here, you hit the leave, it lets you exit the bank reconciliation process so that so you can come back later. Then what kind of report? A detail or a summary. Now the summary is going to basically kind of show this part right here. Beginning balance, what deposits, what checks cleared, what's your ending balance. The detail gives you all the information behind that. Hey, you had $5,000 worth of checks clear. Here are the 10 checks that cleared to make up that 5,000. You had 13,000 of deposits clear. Here are the deposits that make up that. So as is recommended here, take both. You can print them, you can display them. If you just hit print, it's going to print them off. For me, my old eyes in kind of small font, this is just nitpicky. I always go to display and then increase the font so that my old eyes can read it better and print it off. If you're of the younger generation, you're going to say, Mark, why are you printing anything off? You don't have to. You can save it as a PDF right there. Keep it for later. Definitely keep a copy of it. If you're audited somewhere down the road, you're going to want to have this bank reconciliation available, but you do not have to print it. You can make a PDF, save it electronically, saves time, saves space, saves paper, all that good stuff. If you're a dinosaur like I am, and you like that paper, you can print it off as well. If you have that. That gets you through, again, a high level here on the basic things of QuickBooks. What we said we were going to cover. There's more workshops coming up. You see here that this list, this is in fact, what we have today is the last one on this for the November. There are more workshops coming up in December. I will be doing part 3 coming up here in December. Pretty quickly, I don't remember exactly the date, but pretty quickly in December, we'll be doing part 3 where we dig in deeper. There are a lot more webinars coming out. We try to keep them short. Again, we didn't go 2 hours like we didn't go 2 hours last time. But I'm just trying to pique your interest, to kind of whet your appetite for what is available. QuickBooks is a powerful tool. It's a great software. We'd love to help you understand it better as you need additional help. You see here coming up some additional meet and greets. There's one coming up December 7th in District 6. There will be another one in January for Districts 4 and District 1. Of course, TCTR coming up in February. Get on the IDOT webpage, look around, find these different things. Take advantage of these programs. Don't just ignore what's available. Another question just came in. When I make a credit card payment from my bank account, what account is the credit card payment recorded? Okay. So I'm going to go back and I'm going to assume you enter your credit card charges. So you've entered your credit card charges through the banking module on QuickBooks. So you've debited your expense account, you've credited your credit card payable. When you then pay that bill, your debit for that, your check is going to then be coded to that credit card payable. So keep in mind, debits and credits always have to balance. I'm getting into some deeper accounting here. Debits and credits have to balance. Expenses are debits, so I'm entering my expenses, they're debits. My credit card payable is my credit. Now I'm going to write the check. I'm going to debit my credit card payable, so that I'm offsetting that. I'm going to credit the cash account on the other side. So when you enter your credit card payment, code that to wherever your credit card liability is. Hopefully that helped answer that. If there are other questions, go ahead and be entering those so we can try to answer them for you as we go here. If you get a survey, please feel free to fill it out. Let them know what additional things would be of interest. Take a look at all the workshops that are presented. If none of them really hit the areas where you're needing help, let us know. We're trying to develop these workshops based on the feedback we get. So if there's an area that's like, man, I'd really love a workshop on this, let us know so we can develop something for you. Obviously, for additional information, you can always contact the Bureau of Small Business Enterprises. Talk to Brian Hendricks, let him know, hey, Brian, we need more help in this area or whatever it is. That's all I have for today. I don't see any other questions at this point, so I will, I'll wrap things up and let you know the PowerPoint, I think, will be possibly emailed out, but it will be available later. Thank you for participating and look forward to seeing you all again in a couple of weeks when we do the next one. Wait a second, I just got another question here. Can QuickBooks auto calculate union benefits based on different jobs? It can if it's set up correctly. So that's where if each job has a different benefit rate, you're gonna have to put in that different benefit rate for each employee. And then you're gonna have to be sure you select the correct one when you go in to pay the employee. So yes, it can. It's very detail oriented on the setup for the employee. But I'm not sure where you're located, but if you're in, let's see, my guess is you're gonna be in districts 1, 2, or 3. Contact wherever you are, contact your supporting services consultant, and we can help you get those set up so that you've got all those codes in there. We have a client that is a union contractor. They work with 3 different unions all over the state, and it's a nightmare trying to constantly keep track of getting the right ones. QuickBooks can do it. It just takes a lot of work to do it. Hopefully that answers the question. Otherwise, thank you all for being here. Look forward to seeing you again in a couple of weeks for part 3.